What's up, investors? Welcome to another episode of the W.T.F report, bringing you the latest and greatest news that directly impact our financial markets and, more importantly, our portfolios. This week we got a lot of macroeconomic subjects to cover. We have some new U.S. China tensions that are kind of escalating the whole situation. We had some new stimulus packages that were passed in the EU and were in the works in the United States. And to top it all off, we had a little bit of a tech pullback due to some circumstances regarding earnings and just required the overall outlook in the tech industry. And we got a new replacement of the conservative investment. So without further ado, my name is Ayan with AQ Markets. You're watching this week's WTF report. As usual, let's talk about the overall market. This week we had the Dow Jones down a little bit over 0.7%. We had the S&P 500 down a little bit more than 0.3%. And the NASDAQ was the biggest loser this week. It was down 1.5%, as I mentioned, because of the whole tech pullback. There's a lot of chaos that happened this week, but let's first talk about tech. Because last week, as I mentioned before, a lot of people who were a bit more conservative in their investing and were really unsure where to put their money, there's been a huge demand for these big cap tech stocks, and that's why there's been a massive rally in them over the last 4 months during COVID-19. However, when earnings come out, that's when people start to change their mind. We had some pretty big players release their earnings reports, two of them being Microsoft and Tesla, and while they did meet certain revenue expectations and certain earnings per share expectations, people were still expecting certain segments to really skyrocket. For example, in Microsoft, they were expecting their cloud computing component to really shoot through the roof this quarter, and it didn't. And along with Tesla, people were expecting a little bit more deliveries and a lot more forward guidance on how well the company was going to be due, and they didn't really give much of a positive outlook on that. So their shares didn't do too well, which was one of the contributors of why the NASDAQ didn't do so well this week. Along with that, in the tech industry, there was a fresh case of the Congress looking into antitrust probes with some of the biggest tech companies. The biggest four being these four right here, which is Apple, Google, Facebook, and Amazon. Now, remember, as I mentioned in previous videos, antitrust laws basically are there to ensure that not one company controls the overall market share or market of a certain product or service, something like that. For example, Facebook is constantly being attacked because they control the whole social media world. They control WhatsApp, they have Instagram, they have Facebook, and they have a lot of aspects of the computer that are all directed into one major company. Along with that, we have Amazon that just completely controls the e-commerce world. We have Google that completely controls the internet search world. And then we also have Apple that is slowly but surely taking over the whole tech world. Now, typically what happens in these hearings is the CEOs or their investment relations people, but typically it's the CEOs that go up in front of Congress and they testify. This is completely voluntary. They're not subpoenaed to forcibly come to the court and give their testimonies, but it certainly does help when they come there in person. Mark Zuckerberg is famous for doing this. Sundar Pichai is also very famous for doing this. And typically what the goal of it is they need to prove to Congress that they still have harsh competition to face within their market space, while the Congress is trying to show them that they are too dominant in their market space. Now, the results of what happens is usually absolutely nothing. You know, they kind of always get away with it. They don't really build a strong enough case for them to actually take actions against these companies. But the two biggest things that can come out of antitrust probes is, one, they reverse merger, i.e. they make a certain aspect of the company go fully autonomous as opposed to being underneath the company. A great example would be if Facebook were to reverse the acquisition of WhatsApp and make WhatsApp an independent governing company. Another example would be if they force Amazon to undo the acquisition of Whole Foods and make Whole Foods back a separately owned company. The other thing that they can also face is if it turns into a lawsuit and they face antitrust lawsuits, they will have to pay the organizations or companies or other governing boards massive fees that can total in the billions. This has happened very often between Google and in the EU, along with some other companies as well. And this doesn't only happen in the tech space, this also happens in all sorts of industries. It just so happens that right now tech is under a lot of fire because they've become mega corporations that are literally worth $1 trillion. Moving on into some other macroeconomic news, the EU recently passed a massive stimulus bill. And people were expecting this to be around 500 billion euros in value, and it ended up being 750 billion. 390 billion of it is going to be given to grants, and the remainder of it is going to be going towards really low interest loans to corporations that have just completely suffered during the whole COVID-19 pandemic. This isn't limited to large corporations and public companies. It's also going to be going to private companies as well in order to help lift up the small business sector. Now, the reason that markets responded positively to this with respect to the United States It's because a lot of these major companies in the EU are actually publicly listed on some of our indexes like the Dow Jones, the S&P 500, and the NASDAQ. So those companies had a pretty good boost upon the knowledge that the bill was passed. Along with the EU, the United States is now working on its second stimulus bill known as the CARES 2 Act. The first one was called the CARES Act. And this is going to be a little bit smaller, and by a little bit I mean a lot. It's going to be $1 trillion as opposed to $3.5 trillion, which was the first stimulus bill that was passed earlier in March. And this is going to be a lot more strategically allocated. We don't need as much money as we did the first time, and they're also going to kind of take into consideration that a lot of these companies got maybe a little bit too much money than they should have gotten. There is a potential that there's going to be another $1,200 stimulus check, so if you don't need the money, first of all, help your friends and family who might need it, and if you don't want to donate it, then put it in the stock market, have that money work for you, but invest very wisely and diversify your portfolio. Very important. So overall, the markets responded pretty neutral to this, and that just comes from the fact that there's a lot of bipartisan disagreements on where the money should go, whether it should be going to certain aspects or other aspects, or all that jazz. That's political. I'm not diving into that, but they're hoping to get some sort of agreement by the first or second week of August. So when that does go into the approval stage and President Trump signs it, then the markets are going to react to that. Now, to top off the chaos of this week, we have some more U.S. China tensions. There's always been tensions between U.S. and China. It has a lot to do with trade. It has a lot to do with data security and all jazz. But now the United States decided to take it a little bit of a step further, and they forcibly closed the Houston consulate for China, which is pretty mean. And they had 3 days to leave and close down. And, per usual, the company would retaliate, and they also now told the United States that they have to close their consulate. Now, this creates a lot of political drama, political damage, political tension, which is very important in the stock market, depending on what country is being involved. So when we think about China, let's just go ahead and take any object in your house, turn it upside down, and look at the sticker or the mark on it. It says made in China. Now, if we were to have a really bad, well, even worse relationship with China, all of these products could face tariffs, and in the worst case scenario, we could face sanctions, which means that they're absolutely going to do no trade with us in certain industries or certain products. The markets react to this because if you look at Nike, for example, all of their shoes come from China. If you look at a lot of our technology companies, a lot of the parts and a lot of the labor come from China. If you look at Walmart, a lot of their products are made in China. So if there were to be a really bad scuffle between us and these tariffs skyrocket, this would completely negatively affect our companies that are based in the United States, and that will also trickle down to the consumer because our cost of goods are going to increase, which means shoes could cost, from $50, they can go up to $70, and that'll trickle down into a lot of different products that the average American purchases. So that about wraps up a lot of the turmoil that happened this week that led up to the indices being in the red. And one very important thing to note is, as I mentioned in my last video, the tech sector has been the safe haven for conservative investors because of their profitability, their market size, and just the fact that they're really good companies. But now that the tech industry is facing a little bit of trouble, people are resorting back to the most original conservative investment, and that is gold. So this week, gold almost hit its all-time highs coming off of the 2011 spike after the financial crisis. Then, right now it's around $1,900 an ounce. They were predicting it to go above. Its all-time high has been $1,920, which is what happened in 2011. And there's speculation that it could drive even further. A lot of people are now pouring their money into gold. Gold has been a pretty safe investment when it comes to inflation and when it comes to political tensions. So people are now dumping their tech stocks. They might be going back into bonds, but there's been a lot of demand in gold. So in other news, Pfizer actually took its first order of the COVID-19 vaccine, and you guessed it, it was from the United States. They paid $2 billion for 100 million doses, which comes out to be $20 a dose. And it's very interesting because this is the first time that an order is being placed for COVID-19 vaccine, which means that $20 is the price. This impacts a lot of the future revenue projections for all the biotech and pharmaceutical companies. So a lot of them reacted throughout the week. A lot of the smaller companies also got impacted because people are thinking like, okay, if Pfizer got the first delivery, that means they're going to get the second, the third, the fourth, the this, and the that. So it's kind of just like a race. Whoever can make the vaccine will make the most money. And it might be a situation where multiple companies are producing it because they can't monopolize the vaccine. So we're going to see. But The biotech space has been very, very volatile. As you've seen, some of these companies jump up 40 to 50% in one day, and some of them drop 40 to 50% in one day. So be very cautious if you're investing in one of these biotech companies that can potentially create the cure for COVID-19. Thus concludes this week's WTF report. As always, if there's anything I missed, drop a comment below and let's talk about it. And most important of all, don't forget to like this video, subscribe, and then tell every single one of your friends and families to do the same thing. Thank you so much. I'll see you guys next week.